leaders, 40 under 40, would request everyone to kindly take your seats and put your mobile phones on silent as the event is about to start shortly.
Please welcome Ashima Jain, your host for the evening.
Good evening, ladies and gentlemen, and welcome to ICAI Presents CA Business Leaders Awards 40 under 40 in association with CNBC TV 18, process partner CareEdge Ratings, and bespoke partner Da Milano. I'm your host Ashima Jain, and thank you so much for joining us this evening. Well, India is the fifth largest economy in the world and is steadily moving towards the 5 trillion mark by 2025. And to leverage the true potential of the economy, the role of CA is of utmost importance. Whether it be economic planning, taxation, capital, or social accounting, the role of CAs has been crucial in realizing the country's dream of becoming an economic superpower. In the words of late Shri APJ Abdul Kalam, accountants are the partners of nation building. And through this brand new initiative, CA Business Leaders Awards 40 under 40, we aim to identify and recognize young CA business leaders who have done extraordinary work across different sectors. We will also have some interesting sessions on how we can drive the Indian growth story. Ladies and gentlemen, I request all of you to please stand up for the national anthem, followed by the ICAI motor song. Can we have the national anthem and the motor song?
Jana Gana Mana Adhinayak Jaya Hai Bharat Bhagya Vidhata Punjab Sindh Gujarat Maratha Dravida Utkala Vanga Vindhya Himachala Yamuna Ganga Uchchala Jaladhi Taranga तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you so much. Can we have the ICAI motor song, please?
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, everyone. Please settle down. Before proceeding further, let's quickly take a look at what the event is all about. So can we have the event AV, please?
Chartered accountants have played a crucial role in guiding the nation towards financial and economic growth, making them an indispensable asset to the country.
chartered accountants will play a very critical role going forward in terms of our economic growth.
Across the globe, I have seen that many chartered accountants are at a CEO position, and definitely going forward, I can see that they will be the people who will contributing in substantial quantum in the achieving the 5 trillion economy of the country.
The Indian Chartered Accountants' role and accounting system of ICAI is going to be a major contributory in the $5 trillion economy of this country.
Institute of Chartered Accountants definitely is playing a very vital role in promoting the best governance practices, and also creating a huge talent pool for the development of across the businesses, including the capital market from where I am coming.
As we predominantly see that the Indian accounting system has evolved over the years and has promoted the growth of the accounting as well as the financial services in the global market as well.
A strong accountancy system is essential for India's road to a 5 trillion economy. It is an important part of ensuring that the right strategies are in place to manage the country's finances, measure economic performances, and assess the impact of policies.
I think to encourage and recognize their contribution to commerce, industry, and the various roles that they play, I think this very important initiative was carved out in partnership with CNBC TV18, and I must compliment the then chairman.
It's now time to recognize and appreciate the exceptional contributions made by these CA professionals who have demonstrated unwavering commitment and excellence in their field. At these awards, we aim to honor young CA professionals who have championed the cause of promoting fair and best accounting practices. They have established themselves as role models in the industry while creating sustainable value for their stakeholders. Our esteemed jury panel has meticulously evaluated the nominations after a rigorous selection process to identify 40 outstanding achievers under the age of 40, the torchbearers of nation building.
It's a super initiative between ICAI and CNBC to recognize the 40 leaders under 40, and this will be the young power talent house which will take us to the next level of our own ambition realization.
The companies do not face guilties in terms of their compliances, their filings, and the reporting standards overseas. And by doing so, they have ease of doing businesses in various parts of the world other than the India.
Recognition always sort of play a very big role, and you know, this 40 under 40 is definitely a very good and big step towards you know, sort of achieving that.
It's a very good initiative on the part of CNBC, and of course ICAI has played a major role in being part of this, and such awards should continue so that people will bring out their talents to the public at large, and others also can learn from that.
The Institute of Chartered Accountants of India, known as ICAI also, plays a crucial role in establishing a position of thought leadership and innovation for India in the field of accounting, assurance, taxation, finance, and business.
So let's celebrate their transformative vision and explore new avenues to facilitate India's growth story. ICAI presents CA Business Leaders 40 under 40 in association with CNBC TV18.
Well, moving on, I would like to invite on stage CA Durgesh Kabra, Chairman CMIB ICAI, to set the context for this initiative with his welcome address. Sir, over to you.
Good evening, one and all. It's indeed a pleasure for us to welcome you all in this illustrious event. The Honorable Chief Guest for today's function, Subhash Gargji, the panelist and past President of ICAI, Nihar Jambusaria ji, panelist Sanjay Aneja ji, Chandan Agarwal ji, Nainalal Kidwai ji, and my Vice Chairman of the CMIB committee, CA Rohit Ruwatia ji from Jaipur, the other council colleagues, Gyan Chandra Mishra ji from Ghaziabad and Hansraj Chugh ji from Delhi, and all awardees, the office staff, and some guests of the awardees too. Friends, this year I have been interested with the chairmanship of CMIB, and what is being thought, which was thought in the last year, has to be completed in this year. And let me tell you, friends, the chartered accountants are very important. They play a very pivotal role as complete business solution provider in the nation building. We provide a solid foundation to the economy, and with our financial expertise, we guide the nation in different financial and economy related matters, which has Indian economy to grow, and that's how the chartered accountants are also known as partner in nation building. CMIB thought of organizing 40 under 40 CA Business Leaders Award last year, and we are executing our first award this year. And that has been thought of in association with CNBC as the media partner and associate for this event. And to commemorate the same, we are recognizing the weighty contribution of young and dynamic chartered accountants who have contributed a lot in gradually changing the accounting profession and driving economic changes across the industry and the nation by emerging as the leaders in the business and profession. It's time for all of us that we celebrate the contributions and the hard work of chartered accountants. And this award ceremony is going to celebrate the achievement of brightest young chartered accountants. We want to recognize the dedication, creativity, and hard work of all these young professional brothers and sisters who are making astounding impact in their field and inspiring many others along the journey. This recognition and appreciation will inspire them to continue to strive for the excellence and contribute to the growth of the industry. At the same time, these awards will help create a benchmark for young chartered accountants to determine their goals and strive to reach higher success in their endeavors. We hope that these awards will create values for the chartered accountants and the industry. The chartered accountants will continue to play a leading role in driving reforms and practice that have helped and shaped the Indian economy with a robust taxation regime to corporate governance and ethical standards. For a new, vibrant India, the journey has just started, friends. As our economy continues to grow and evolve, it is important that we maintain economic sanity to ensure that the country can take advantage of all the opportunities available, and that comes with it. This means that trust, confidence, and accountability must be maintained among the masses so that the Indian economy reaches to its fullest potential. We at the ICAI continue to innovate and follow the practices that supports economic stability and growth. Friends, the leader of the profession, CA Aniket Talati ji and CA Ranjit Agarwal ji, who are the President and Vice President, who will be joining us during the award ceremony, because an urgent meeting has come with the minister and couldn't come right now in the beginning. But this was a dream of our Vice President Ranjit Agarwal ji, that yes, we must have an award which motivates the younger generation of our profession. And it was also a dream that in time to come, these younger generation reaches to the position of CEO, and the 500 top Indian companies are led by chartered accountants as the CEO. And I wish that some of you, or wish that all of you, will become the CEO of one of the leading company of this country. With this in mind, I look forward to the panel discussion on tax reforms driving the India growth story. I'm sure that this discussion will provide valuable insight into how we all as one can contribute to shape the Indian economy towards 5 trillion milestone. With this, thank you all for coming here, and wish a fantastic learning in this panel discussion. Thank you all.
Thank you so much, CA Durgesh Kabra, for those lovely insights. Ladies and gentlemen, for any economy to flourish, the taxation system plays a very important role. Whether it be promoting investments or providing relief to the common man, tax reforms play a crucial part. It's now time for this evening's panel discussion, Tax Reforms Driving the India Growth Story. To moderate the session, may I please request on stage Ritu Singh, Associate Editor at CNBC TV 18. Please welcome Ritu on stage. Let me also invite on stage our expert panel. Please welcome Ms. Naina Lal Kidwai, Chairperson, Rothschild India. Big round of applause for Ms. Naina Lal Kidwai. CA Nehar N. Jambusaria, past President, ICAI. CA Sanjay Aneja, CFO, DS Group. And last but not the least, CA Chandan Agarwal, Head Taxation, Dabur India. Big round of applause for all the panelists here on stage. Over to you, Ritu.
Well, thank you for that. Well, as you all know, the tax system plays a very crucial role in ensuring a rapid progress of any economy. And India, the 5th largest economy in the world, has been able to double its tax base since the introduction of the GST in July of 2017. Collections have more than doubled from FY18 to 22 at 14.8 trillion. And India has also jumped 37 places to the 63rd position in the World Bank Ease of Doing Business report, where tax payment, as we know, is a prominent measure for ranking. Now, several reforms have also been undertaken along the way to provide impetus to business and some relief on personal income taxes, and that has helped push consumption to an extent at a time when high inflation has been eating into disposable income. So in today's panel, we're going to talk about the tax reforms which are driving India's growth story and what the future looks like, how technologies and international opportunities can be leveraged to drive a better story. All of the panelists have been introduced. They don't need any further introductions, but a very warm welcome to all of you, and thank you for your time here. Ms. Kidwai, I'll start with you to just set the context, because you know, right now the world is going through a difficult phase. India is not an island. We're affected as well. whether, it was just coming out of the pandemic, then the war in Ukraine, the central banks around the world hiking interest rates, and now we're seeing the collapse of some of the largest banks across Europe. In this environment, to ensure that India remains on a steady growth path, what is the role that tax reforms can play?
So we have a lot to celebrate in India in terms of the GDP growth that we're expecting, and I don't believe that that is in any way changing. 6 to 7% is the expectation. Clearly not enough. I believe we should be 8 to 10. But we are able to do the 6 to 7% because, as you rightly pointed out, we have robust tax collections through GST. We have therefore been able to commit to a fiscal deficit at 6.4 this year, 5.9 next year. And the process of getting back on track for the fisc is very important for us. And that gets enabled because of a robust tax collection system. Now, for this very well equipped and trained chartered accountancy regime in front of us to translate what are quite sometimes confusing policy in tax into reality, to make it less threatening, less frightening for companies, for individuals in terms of compliance is very, very key on this journey. And I do think that as we look at more collections, in order to help us in our journey to growth, the compliance, better collection, and moving with the times, which is everything to do with the whole business responsibility and sustainability reporting, are all going to be very critical for how companies in our country raise money going forward.
And like you said, in this budget itself, I think we've seen the finance minister announce decriminalizing some of these, tax-related measures. But Mr. Jambasari, I'll come to you. Ms. Kidwai spoke about this, GST revenue, the overall tax revenue growth we've been seeing. 300% sort of revenue growth that we've seen in the last decade, 25% growth in direct taxes in just the last year. But shouldn't we look at these numbers in a more nuanced manner? Because a lot of it is also contributed because of the rising inflation.
Yeah. It's a right question that why the direct tax and indirect tax ratio is not improving. So in direct tax, the rise that we are noticing is partly because of the growth of the economy, partly because of inflation. But at the same time, we see that the bottom line is not rising as fast as the top line. See, the indirect tax collection depends on top line. So sales would rise, but whether in equal percentage bottom line is rising is the question. Apart from that, some part of the income is not taxed in this country right from the beginning in the form of agriculture. So there are many, and let me very frankly put it, who are declaring high income as agricultural income, and the department needs to be very careful in checking out whether the tax collections are robust, and they should focus attention on this aspect.
Well, very rightly said. And Mr. Aneja, if I could, throw that to you. Month after month, we've been seeing rising GST collections, and no doubt it's been a fabulous reform. But that crossing that 1 lakh crore figure each month has sort of become like a parameter of success. Is that the right way to look at it? Because, with inflation continuing to rise, at some point it is going to start having a dampening effect, and that will translate into lower collections.
You are absolutely right. I'm audible? Yeah. You are absolutely right that collection has increased in the past in a big way. But nevertheless, we have to weigh various other things. Like it is now almost 6 years' time that GST has been into, operation. And there are too many things which needs to yet to be done. Rationalization of GST would be required in a big way. We have got number of rates at this point of time. If we see India is the country where we are having maximum number of slabs. Those slabs have always been demanded, right now are 6, and they should be brought down to 2 or 3. If we see various developed countries which are 136, where GST has been implemented in the past. They are having 2 or 3 slabs. It is fully understandable and fully can be, understood that Indian economy is a very complex economy because of its federal system, where the right of collections are with states and government both. But at the same time, we have to see that few things which are pending, like in the case of GST, if we talk of taking ITC, that ITC is not available on many items which are blocked item under Section 17, which simply means if there is a clarity in the thoughts that furtherance of business is the important thing, so everything should be allowed. Similarly, it is more of a tax-protected government system wherein, ease of doing business is not there. With the passage of time, these collections are not going to be that robust because cess, GST cess, which was introduced for 5 years, has been extended now for some more time. When this comes down, collection is bound to go down. We have to make our system more rationalized, harmonizations and classifications of various items, and many other works needs to be done to make sure that this collection keeps on increasing and we bring the informal economy and tax evasion can be avoided. And that simplification needs to be done to enhance those collections, which are at this point of time are on the boost and rampant, so that they continues and we keep on getting that type of collections.
No, absolutely, and that is the idea of this summit, to get these kind of ideas and to perhaps take that thought forward. We have people from the government as well here. But Mr. Chandan Agarwal, let me bring you in as well. Mr. Jambusaria also referred to the tax to GDP ratio. That for India has last, I think, it been around 11.7% or so, quite low when compared to OECD or its other peers. Is there an optimum level that we could look at? Because, every country can't have sort of the same figure that they target. Each case is unique. Each country has its own challenges and opportunities. And how do we get to improving this tax to GDP ratio?
Actually, this tax to GDP ratio is always a concern for government, actually, because the revenue is what drives public welfare. And India been, at a lower bottom of tax to GDP ratio around 11%. That is always a concern for every citizen, including the government. Because if the revenue is not coming, how the public welfare will happen? Public welfare, there would be some gaps, like poverty or education, health system, military, everything gets funded by tax. Now, how this tax would increase? This is always a concern for government. Now, GST, when this indirect tax system was, clubbed as a GST and digital was brought in, to my mind, that is the starting point when possibly tax reform, the major tax reforms would possibly be first level when this tax ratio to GDP might increase. And that is the reason we are seeing the 1.5 lakh per month this GST is coming. There is an increase in direct tax collection, but how far it would measure up to the tax to GDP ratio, I think 2 to 3 years more down the line, we might see a better number, around 15%, maybe government is hoping that number. In all these tax budgets, there is a revenue leakage has been, government is plugging the revenue leakages. If you look at the tax laws, very few areas are there where tax evasion is a different thing, but tax avoidance is also very difficult now. To my mind, tax to GDP ratio is set to go up.
Yeah, absolutely. In addition to what Chandan said, just to give you a few facts, that India has tax to GDP ratio of 11 to 12%. But if we talk of OECD countries and developed countries, they have got 34 to 35% tax to GDP ratio. So we have to go long way, and the move which government is now taking with the technology, it is going to certainly improve in a big way.
Ms. Kadvai, if you would like to weigh in, improving this tax to GDP ratio, currently languishing at one of the lower figures compared to our peers, what are the low-hanging fruits in terms of reforms that we could look at? And especially with respect to GST, the other panelists have raised concerns, whether it is tax rate rationalization, whether it is the classification. What do you think are some of the low-hanging fruits that the government could target right away?
So clearly, continuing to clean up the GST regime helps. But I don't think that necessarily helps in tax collection, because at the end of the day, that is already happening as tax source. It certainly makes it easier for people to work through the system. So it's cumbersome, interpretation is an issue, it's unfair where ITC is not permitted. So instead of people grumbling and feeling that they are paying more than they get out of it, I think is clearly a way where people begin to feel that the contribution through tax is paying for the journey that they are part of, which is helping the country progress. So it's less headache and pride going together, that we should feel proud that you pay taxes to help. The counter to that is, what do you get for the taxes you pay? So the OECD countries you quote have huge policies in terms of free health, free education, quality of life, clean air. I mean, there's no list, no end to that list. So I think we also have to look at the deliverables that come with that tax payment. If I pay property tax, I should make sure I have roads, sanitation, water that come to my home. If I pay a high tax for, at a corporate level, there must be some services that I get in return. So there has to be that give and take, and I think government has to also ensure that people welcome the tax, because there is pride but also return for that favor of paying tax, other than just the fear. But at the end of the day, I think the real compliance really comes from widening the tax net. There's a danger here that we keep flogging the same horse. The horse that's paying, so you go back and then hit them again and again to ensure that they've paid the next 10 rupees. And of course, we should make sure that people declare their taxes. But widening the net is what the government has worked hard at, looking at it more through the consumption pattern. You know, if you have a big car, you bought a house, etc., the tax at source is a good way to tackle it. Agriculture, as was mentioned. And I think at the end of the day, it is going to be about making sure that everybody pays their due. I would argue a low tax with many people in it is better than a high tax with a few people in it.
Mr. Jambasari, what do you think? Should the richer sort of cross-subsidize for those who do not earn as much? Because at the end of the day, we are in a democracy. And you know, I know this headline, everybody in the audience would have kept reading, only 5% of Indians pay taxes, but I hope you understand the nuances of that. Because 5% of what? The population is over 1.4 billion, not all of them are in the workforce. Those who are in the workforce may not have employment, and barely 10% of them would be above the tax threshold. So that's a skewed way of looking at it, but nonetheless, you know, what side of the argument are you on?
Yes, see, apart from what has already been said, like even reducing the tax rate can help, but there is still a big mass of population which is earning in cash. Although digital payments have increased, the track with the government has increased. In AIS statement, you can find many of the incomes already reflected, but those who are still operating in cash, they are not on the books of the income tax department. So the government has to focus on them. Apart from the rationalization of GST, even for people to be facilitated in payment of tax, removing the fear. See, even TDS has many rates. So they also need to be rationalized. Today, there are disputes on whether it is 2%, 5% or more. So all these factors the government should take into account, and even see the tax administration. The faceless system has not totally settled. There are many who fear that under the faceless system, what kind of high-pitch assessment they may face. So all these fears should be removed, and then there will be more compliance, voluntary compliance from the people also.
You know, speaking of fear, every time we at CNBC are covering the budget and we have guests on the channel talking about their expectations, the word that keeps coming up is capital gains tax. So I quickly want to address that as well. Thankfully, this time around, this has not been tinkered with. But Ms. Kidbhai, what are some of the measures that can be taken to streamline it? I know the industry wants it to be zero, to be very low. HNIs are the ones that are being taxed, so there's some rationale behind that. But what do you think could be done to streamline it to ensure that, we don't sort of kill the, investment push or the innovation push from businesses? We ensure that there is a good climate, the ease of doing business remains.
So I think where the capital gains tax is at its thorniest or maybe worst is for startups.
Yeah.
Because what you've got is a huge risk that a young startup company bears, and the way the computation happens is very early in its journey in terms of taxation. So, and that has been a thorny issue for venture capital, for private equity, for all the money we need that helps the economy. And we are an economy which is very thin on equity and risk capital. It's because we taxed our wealthy business communities from the 99% tax levels which they existed at for a very long time in the socialist days to pretty high levels now, and the amount of risk capital in their hands to grow is limited. So what we've now got is a huge dependency on foreign direct investment, because Indian capital, barring 2-3 big houses, is really not going to take our economy forward. So for every money that comes in, they look for clarity, which we don't necessarily give. I think advanced tax rulings are a big step in that direction, but they take too long to come. But clarity, consistency, and of course, equity. So if these 3 rules are applied and applied early, I think we would actually see a lot more. One Vodafone, 50 companies go away saying, who needs to deal with this? We've got 1,000 other countries in the world we can go to. Yes, India is attractive, but hell, it's very difficult. So what we have to look at is making us an attractive and clean and clear destination on the taxation front. I just have an additional point on this. And if we are to look at tax litigation, I mean, about 85% of all litigation is where government is a party, this side or that. Much of it is to do with tax. Imagine if we could clear all that tax litigation, the money that would come into us. So, and one way would just be take it out of the legal system, make sure that it's all into an arbitration mechanism, collect all the money, let people, get a little benefit from it, and bring all that money into our coffers and stick it into the growth of the country.
No, absolutely. We do not want repeats of Kane and Vodafone kind of cases and retrospective taxation. Because like we said, tax reforms are important to attract capital also into the country. But, let me briefly move away from capital tax and also touch upon the personal income tax. Again, some of the panelists spoke about it, but Chandan, we've introduced a new personal income tax regime, but I don't know how many in the audience have even switched to it. The idea is to streamline it, to do away with some of the exemptions. But what do you think? I mean, the tax is being calculated by a computer at the end of the day, as Mr. Arvind Panagaria, famously argued once. You don't need only 1 or 2. You can have several slabs if that is the concern. But, what are some of the more finer points that could be streamlined? Any suggestions that the government could take on board?
See, to my mind, this is one of additional option given by government. There is an existing slab already. Now, up to the slab is like in 4-5 numbers, and then the new slab up to 15 lakhs. And so this is an option like people can pay down. Like I don't think it's that attractive proposition. But somebody, let's say, staying in his own house in Delhi, they don't need to pay HRA, so they can opt for this regime, new tax regime, because HRA is only for people who don't have houses, and they need to pay rent to the landlords. So we have got mixed sort of people actually in India. So to my mind, this is just an option. You can't say this is an attractive or not attractive. This is, to my mind, the government would have considered it.
Okay, let's
and at a lower level also, people up to 15-20 lakhs, they may not have an investment, like up to 3 lakhs, 2 lakhs. They may not have that money. This is what government is saying. You don't have money, so where is the question of ATC? So better you shift to that new regime in that sense. So it's a mathematical formula to my mind.
We have a very small sample set here, but these are some of the wisest people in the world of finance. These are chartered accountants. So let me ask you by a show of hands, how many of you have actually switched to the new tax regime? Zero. There you go.
So most
Zero.
of people are claiming HR,
Not
I guess.
even you, Mr. Garg.
Most of people sitting here are claiming HR and ATC. And now how they are doing it, it is up to them.
And moreover, where the income is high, it is not wise because you are the finance brain to go for the new tax regime, and I can buy not raising the hand can make it out that you have a very good income.
Okay, Mr. Aneja, also, at the end of the day, when we talk about tax reforms, the key is compliance. You want to ensure that people find it simple, there is easier processes, more and more people file their taxes. What is the role that technology can play? And if you could illustrate for us any of the recent examples, emerging trends that could help with compliance.
Technology plays very, very important role in compliances. There are two methods. One is carrot, other is stick. So carrot encourages you to do something, and which is encouraging you to do it voluntarily. For that, technology can help by, putting online, submission of your ITRs, getting the informations continuously. 26 AS is there, so that wherever you are, it is not discomfort to you to file the returns, to go through your, tax, whatever you have deposited. And this would definitely encourage to those guys who want to actually do it. But at the same time, stick is also there. For stick, there is a collaborations between various government authorities who shares the data among themselves, and they can make it out who is trying to evade the tax. And by doing that, those notices are continuously going, and which is creating a, I can say, hindrance, or it is creating a deterrent, wherein, if the department is vigilant, because if we are doing certain things manually, we can't keep open every file. Anything goes to the file, that is then and there over. But if system is there, technology is there, we can collate the data, we can relate the data with each other. And department using analytical, skills and AI is definitely going to help that what are the variances and what are the reasons that certain taxpayers are not paying the tax, and notices can immediately be issued and those can be resolved. Definitely technology all through is going to play a very, very crucial and important role in making these tax compliances. And I'm sure the way it is moving, we are going to get those percentage of taxes to GDP ratio rise in the time to come.
Well, we do hope that happens, but linking Aadhaar with PAN, for instance, is that going to be a game changer?
It is one of the points which is there, because the objective of linking Aadhaar and PAN is to make sure that your identity can be known. Aadhaar is a biometric system wherein you can't ask for many PANs by giving the wrong information. So it is going to help in a big way. It is still not mandatory, and in the time to come it is going to become mandatory. But it is going to be one of the boon in making the voluntary disclosures very, very compulsory for all of us with the passage of time.
All right. When we talk about taxation, I think one of the holy documents is the budget document each year, at least as far as direct taxation is concerned. Mr. Jambusaria, 2023 budget largely hailed as a common man's budget. What did you make of the reforms that were announced, actually several of them this time around, and what more would you have wanted to see?
See, apart from what has already been done, there are many things to do, like the 143.1, that is the intimation assessments which are being made. Now, they are given the power to make adjustments. The adjustments which are made are such which are not required at all. They are already there in the computation, and when you are given the opportunity of explaining and you write back to them, no cognizance is taken. So this will increase litigation, and all these are stumbling blocks in voluntary compliance. People think that in spite of declaring income, in spite of being honest, cognizance is not being taken. See, of late, refunds have become faster. You file the return, many taxpayers have received refund very fast. But at the same time, when you win in litigation and the tax paid is required to be refunded, it is not coming back very fast. And many officers are bound by their budgets, and government, as you rightly said, that whether even in indirect tax, this kind of tax collection could be the target of the government. At the same time, this kind of budget should not be the target of the government. So there are many other things which are required to be streamlined through internal circulars, internal rules and regulations which they have to make. I already spoke about the faceless assessments. Even this scheme is creating a lot of confusion in the minds of those who are hearing facelessly, and because of which even litigations are going up. So these are some things which require streamlining, either through Act or through very strict rules and regulations which they need to make internally.
Okay, I'll carry forward this theme of the budget this year. And Ms. Kidwai, since you brought up startups, you know, on 31st we had the economic survey talk about how, you know, we have startups in the country, they're mushrooming and they're the backbone of the economy. What we need is to bring them back to India, shift their domicile here. And the very next day, the government shocks them with an angel tax. I mean, how do you see some of these rules and regulations and taxations for startups impacting the industry? I know maybe you'll bring up the positives as well, you know, the tax relief being extended by another year. But angel tax, I mean, that's a big concern, especially in today's time when funding is critical.
It is an issue. I think in our desire to pull money in today, we will lose out on tomorrow. Because those businesses which will be your profit generators and taxpayers of tomorrow go away. And I think that is really where we need to focus, on the tomorrow rather than just the today.
All right, so don't give up the larger gains for immediate benefits, so to speak. You know, we're left with little time, so I'm just going to get a few more comments. Mr. Jambusaria, back to you. And, you know, since we're here at this event hosted by the ICAI, what is the role that you're playing in, you know, sort of framing these reforms, consulting with the government, the thought ideation that the institution is doing?
So you are talking about only tax reforms or every reform? I may
largely taxation, but sure, you could touch upon others.
See, in tax reforms, every year the Direct Tax Committee, International Tax Committee, gives its suggestions in the form of pre-budget memorandum, post-budget memorandum. They do give a hearing to the committee. The chairpersons of the committees do go and attend and give their views. But I would personally feel that even that time given to the institute is not enough, because in 10 minutes, 15 minutes, you have to wind up all your suggestions. So on the part of even Finance Ministry, there should be better engagement with an institute, premier institute like the Institute of Chartered Accountants, where direct tax provisions, international tax provisions are being studied by senior chartered accountants in great detail, and the inputs that they bring on table would contribute to the government in framing tax laws which are very conducive to compliance. In other areas also, like even sustainability, because you said what generally we contribute as the institute, whether it is sustainability, whether it is MSME, during the pandemic, post-pandemic, it is evident that to SEBI, it is the institute who framed the social accounting standards. We have framed forensic accounting standards, which is nowhere in the world. Apart from that, for revival and survival of MSMEs, number of suggestions and research papers were presented to Niti Aayog and government. Even in sustainability area, the institute is partnering with Niti Aayog as well as SEBI. So this is the contribution that ICAI makes in every area of restructuring reforms that the government is looking at.
Okay, just a couple more questions and I'll ask everyone for their responses, starting with you, Chandan, perhaps. You know, this ambition that India has of becoming a $5 trillion economy, now pushed by, of course, to FY26. What are some of the top 3 tax reforms you'd like to see the government take? And what are the top 3 tax-related provisions you'd want them to do away with if we are to achieve that dream?
5 trillion economy, it cannot happen with India's own capital. Means we need to import capital into India. If we don't get right kind of FDI, to see that number of 5 trillion is very difficult. Now with tightening of tax laws, especially this section 5672B, where FDI in form of private capital, not to listed companies, is been brought into more scrutiny, I would say. Now whether that can be some sort of a showstopper, I have my guesses. But I think for 5 trillion economy, government should announce some more ways to attract foreign capital, which is missing in the budgets. What government is possibly expecting is that India is a growing economy. It's got large consumption base, so it would attract industries to come and set up in India, because here the business is actually, and when the business is there, there's a profit. So that is only government possibly is banking on. To an extent, that is right. And whether some tax reforms can be done or not to fuel that, that only time can tell.
You skipped on what tax provisions we should do away with.
Pardon, which?
What provisions should we do away with?
Tax provisions, like, I don't think they can do away with any tax provisions. They should possibly bring some tax reforms, like, you need to balance between domestic taxpayer and a person who's bringing FDI into India. Now, whether you can give certain advantage to people who bring capital into India, it looks difficult. So I don't think any provision they will do away.
Well, I'm just playing the devil's advocate and no intention of putting anyone under the spot, but Sanjay?
I think simplification is the key word. And of course, with simplifications, we are going to increase our tax base. Like capital gain, we were expecting is going to get a lot of changes in this budget, wherein it is a complex systems of setting the capital gain taxes. So capital gain, I think it should go away, and more technology should be, brought in the systems, and the knowledge of the administration, their technical knowledge and awareness should be enhanced, so that when tax base increases and these provisions are being simplified, definitely with even 6% growth in next 5 years to come, we are going to be 5 trillion economy, which is right now is at 3.5 trillion.
So you're saying reforms or no reforms, we're getting there anyway. Ms. Kidwai? Sure.
Two things, like for attracting foreign direct investment, I think apart from the clarity on tax, which is not there even today. See, the foreigners who invest here do not mind paying tax in India if it is payable, but there should be absolute clarity on what is payable. That is one. And secondly, on ease of doing, although the index is improving, there are certain major stumbling blocks which need to be removed. Like today, for forming a foreign company in India, it is still taking a lot of time, whereas there are many jurisdictions where you can form a company within less than a week's time. There are many jurisdictions where it can be formed within 2 or 3 days, and that too without compromising with the KYC norms. So India has to step up on that with improvement on technology. They can take full advantage of technology and offer this facility to foreign investors, where they don't face the trouble of coming to India and then setting up the organizations, restructuring it, clarity on tax, which is payable in India. So these are the steps which need to be taken.
Should we relook at tax in the agriculture space? Since that's an area you brought out earlier.
Yeah.
If you would elaborate.
No, tax in Canada?
Agriculture.
In agriculture. No, I suggested that there should be tax on agriculture. It is not that what they are pleading, that poor cannot pay tax. If a person earns, then only tax is payable. If a person makes loss, no tax is payable. They should make a beginning by at least introducing a low rate of tax. So there is a check on whether the income which people are declaring as agricultural income is really agricultural or is it not, and it is liable to full rate of tax. So some form of tax needs to be introduced on agriculture. which may be politically difficult for the government, but it is the need of the hour.
Absolutely. And adding to what you said, since we are having modern technologies of agriculture now, and the tax which was being exempt for agriculture at that point of time, that, you know, farmers were on the mercy of weather, droughts, and so many things were there. So it was thought of exempting the agriculture tax. But now big industrialists are coming, modern technologies are coming, they are making the money. So I agree with your point of view that certain tax, even with a small start, should be brought to, you know, bring that tax.
And like Ms. Kidwai said, not keep flogging the dead horse, not keep, making the people who are already paying a lot pay 10 rupees more, 100 rupees more, widen the tax base. Ms. Kidwai, final thoughts before we close. Your top three on what is positive and what should be removed.
So what I would like to see is a lot more push for exports, which would mean incentives therein. We are still seen as a pretty tough base to export products, and this has to happen through competitiveness here. Our lack of competitiveness in terms of high logistics costs, which are going down, high power costs, which are also hopefully going down, can in fact be set off against a more attractive tax regime which enables export. I guess PLI sort of caters to that. It doesn't go down very well globally, but the fact is that all countries are trying to attract investment and become bases for export. So I would like to see much more incentivization for export, much more incentivization for investment in the country. Make it very clear, not do it 1 year at a time. You can't set up a plant with a 1-year view. You do it with a 5-year view, and then you can, if COVID happened, there's a plea that it be extended. Let's be realistic. And be consistent then in terms of sticking with that direction.
All right. On that note, I think we've all had plenty of food for thought, and you've all been wonderful panelists, and thank you so much for being so candid. Ms. Naina Lal Kidwai, Mr. Nihar Jambasaria, Sanjay Aneja, and Mr. Chandan Agarwal, all of you, thank you very much for your time here, and a big round of applause for all of you. Thank you.
Thank you.
Thank you so much, panelists. I would like to invite CA Durgesh Kabra, Chairman. Can we have a photo op session before that? I'm just going to invite you there. Thank you so much, panelists. I would request you to just stay back on stage. We would like to give you a token of appreciation. For that, may I request CA Durgesh Kabra, Chairman CMIB ICAI, and CA Rohit Ruvatia, Vice Chairman CMIB ICAI, to please come on stage and present the token of appreciation to our esteemed panelists. Ritu, could you come back on stage? Thank you so much, everyone. I think the panel discussion was really intense and wonderful. Thank you for that. Well, before we proceed further, I would like to welcome our special Central Council members who are here, part of the audience today. Mr. Sanjeev Singhal, Mr. Rajkumar Adukia, Mr. Piyush Chhajar, Mr. Raj Chawla, and Mr. Charanjot Singh Nanda. Thank you so much for joining us today. Thank you. Ladies and gentlemen, moving on, I would like to invite our guest of honor, Mr. Subhash Chandra Garg, to come on stage and share his thoughts on the building bricks of sustainable economy. Mr. Garg has served as the Economic Affairs Secretary and Finance Secretary of India. Sir, I request you to join us on stage. He's also served as an Executive Director of the World Bank and is also an author. Sir.
Thank you very much. Good evening to you all. I was very interestedly listening to the conversation so far. There are several things which seems to have caught the imagination of the people around. The $5 trillion economy is something which I think seems to fire everyone around. Tax to GDP ratio, the role of the chartered accountants, agriculture income, many things came up. And the ESG also, I think, came up quite a lot. And the subject I was assigned, which has a lot of ESG built into it. So what I'll do is to have conversation with you. I'll take you through the process of this $5 trillion economy, what it is, where businesses fit in, where you fit in, what is changing, are we going there, what are the hindrances or the opportunities on the path, what is changing now, because you will build this economy in future, so and lot is changing, and where does the ESG and other things fit in. So let me begin by this idea of the $5 trillion economy. What is this $5 trillion? This is gross value added, GDP, and GDP is, I'm just trying to make this basic conversation clarity first. The GDP is the GVA plus the net taxes. So the gross value added in the economy, which is the value added by all the goods and services produced in the economy. If you add that up, that is the gross value added. If you add the taxes collected by the government and deduct the subsidies provided by the government, that's the net tax, as we call in the economics, that is the GDP. So $5 trillion dream or $5 trillion goal or target is made up of the three basic components. One is how is your GVA going to move, how is your taxes going to move, and how the subsidy structure will work in the economy, right? And if you get this right, you will probably reach there. By the way, just for information of some of you who might not have come across, I wrote a book last year, which is titled The $10 Trillion Dream. So, and the state of Indian economy and the policy reforms. So sometimes people wonder why we are talking about $5 trillion, you're talking about 10 trillion, what is this going around? So I always explain this and attract the attention of the people to go back to the finance minister's budget speech in the interim budget of 2018-19. Oh, that is 2019-20. So it was delivered in February 2019 by Mr. Piyush Goyal. And in that budget, the government officially spoke about the goal of $10 trillion Indian economy. Right? And I will also invite your attention, just to make that emphasis, that that was not a fluke. If you look at the BJP's 2019 election manifesto, the election manifesto talks about $10 trillion Indian economy, right? And then sometime in June 2019, if you go back, there was a meeting of the Niti Aayog Governing Council headed by the Prime Minister. In that, after some thought that 10 trillion might be a little while away, because at that time we were about a little less than 3 trillion. So making the economy go up by 3 times might take some time. And we were also talking about in the middle of 2030s. That's what in the 2019-20 budget speech. And therefore, if you set a more realistic, realizable, intermediate goal, then you talk about the 5 trillion. So that is where it came. And the press release issued after that talked about 5 trillion by 24-25. We did some backward calculations again and found that 24-25, 5 trillion is an impossible situation. You can't grow a $2.9 trillion economy in the space of 4 years to a 5 trillion. You do anything. And by the way, this is in dollars. This is not in Indian rupee. You convert, so the goal is in dollars, because internationally comparable thing is only dollars. And therefore, again, 2019-20 budget speech of the Finance Minister, Nirmala Sitharaman, you would see that the goal of 5 trillion by 25-26 is what is mentioned. So officially, Indian government goal or the ambition is to reach 5 trillion by 25-26. Where are we today? We are today somewhere, I'm talking about now 23-24, so the government has estimated the 23-24 nominal GDP to be around 302 trillion rupees. 302 trillion rupees, 300 lakh crore as it is stated. If you convert this at the current exchange rate of about 82 or so, you get a number that we would be at the end of the next year somewhere close to 3.3 or 3.4 trillion dollars. So at the end of 24, if you are at 3.3 or 3.4, reaching to 5 trillion by 25-26 is also not possible. There are some papers which are moving around. There was a famous paper which IMF put out and said India will achieve the goal by 27-28. Incidentally, in today's paper, there is a good discussion about whether we'll reach by 27-28 as the IMF says, or we'll take longer. So the critical element here is the exchange rate. So the IMF has assumed the exchange rate to be at around 77, whereas we are already 82. So if you are already at 82 and you depreciate by 4 to 5%, again by 27-28, it's unlikely that you would reach the 5 trillion. But that doesn't matter to my mind. We will eventually reach someday to the 5 trillion. What to me matters is that when you guys, all of you are working in businesses. The businesses create the value. No one else does it. The government doesn't create value. It runs some businesses. In that sense, they also do some business value addition. But most of the value added, 95% of that, or 90 to 95%, comes from the businesses. And the largest value addition comes from the corporate businesses. There is a lot of talk around these small businesses, informal economy also being a big driver of the, that's fine, because a lot of people work there and a lot of small and medium businesses are there. But the large chunk of the value added in the industrial economy or the manufacturing economies comes from the corporates, and that is where you work in. And that is where, to my mind, you contribute enormously. to this entire business. What do you do? I think you perform three very important functions. One, you account and audit. So unless you account, you don't count 5 trillion or 4 trillion, it's all. It's a number which is accounted for accounted, right? In the national accounting system, we count the GDP in a slightly different way than what you count, because your focus in accounting is the profit, the bottom line. Whereas for the national accounting, it's the value added, right? Value added, for that matter, includes the wages, whereas wages is a cost for you. So you want to cut down on cost to improve the profit, but economy is fine if there is more wages added as part of the value added. But one job which you do enormously is the accounting part and the auditing, right? The second job which you do massively is the financing part. Nothing happens, no production of goods and service can take place without the finance being available. No trade can take place, export, import, domestic trade, nothing really can take place unless the finance is involved. You can't set up a new unit without capital being raised or finance being available. You can't sail, buy without the working capital being available, or even now you can't scale up these startup businesses without the burning capital being available to you, to burn the capital to raise the customer's number. So the finance is a very important function which you also do. And the third thing which I think you do most is the taxation. So, and your perspective is definitely slightly different. Obviously, you are not in the business of collecting more taxes for the government. You are in the business of retaining more profits and the less taxes for the company you work in or for yourself. Understandable. Every one of us, where we are sitting from, will do what we need to do for that position. But for the government, taxes matter. That is the tax GDP ratio. So sometimes I find it very interesting to listen to the people who are supposed to save taxes from the government to talk about raising the tax to GDP ratio. That's fine. It's understandable. We need to have that viewpoint as well. But these are the three important functions which, to my mind, you do. Now, if you relate it to the GDP business, where do you see the changes coming in? See, the whole ESG debate, movement, functionality is all about the three things. E is the environment, S is the social, and G is the governance. Let me talk about the environment. So when you do business, or the businesses do businesses, they externalize certain costs. For example, if you are in the business of producing electricity or generating electricity, you don't mind emitting the gases, nitrogen or the carbon dioxide and others for in the environment to save cost, to improve your profit, because your objective is to improve the bottom line, right? But now the society wants the interest of other stakeholders to be also seen. And what are the interests of other stakeholders? You want a good quality of life, and therefore you don't want the environment to be polluted, the carbon to be emitted, and those kind of things you don't want. And therefore, in times to come, to my mind, if you are to be the pivot around the responsibility for accounting and financing and taking the taxation interest of the stakeholders in addition to the business, then you would have to see about the environment aspect of it. I think you would have the abilities, and the institute and the associate bodies can develop the ways to sort of count how much are we emitting, something which is affecting the quality of life outside, and therefore, and then strike a balance between the business interest as well as the societal interest. You will need to widen. For example, one thing which I sometimes suggest, that is there a way for creating a taxation system around the emissions and the pollution, right? Can we have a taxation system which can tax the emitter more and subsidize or compensate the non-emitters, or the one who sort of extricates the carbon or the pollutants from the atmosphere for the benefit of society? That carbon-based taxation system or the pollution-based taxation system is something which is very interesting thing to happen in future, right? So that is the E part for you, right? Gross value added, to put you in another context, is basically comprising of three things, as I said a little while earlier also. It is the wages, profits, and the taxes put together. All three added are the value added. So it would require, so I spoke about the environment, but if you want to expand your role into the social side of it, right? The social is something where basically the employees, the wage earners, and these stakeholders come, right? Today, it's not your responsibility to take care of their interests. At best, you need to count what goes as salaries and wages, and its cost to company, which matters to you more than what the welfare or the wages component of the value added. So if you want to expand our role in the social side, we will have to bring in. And sometimes I actually argue that is it possible for you to think about bringing a convergence between the accounting standards which we have, or accounting system which we have, and also the national accounting system. If we can bring that, it's possible. For example, you can, I wrote a paper, sometime I'll share that, but you have everything about it. The cost part is there. So one part, today we make trading account, but we can split that trading account in some sense where wages is also brought out very clearly. And then the remaining part is where your profit is. And finally the tax part. And in tax, many times we pay a lot of attention to the personal income tax or the corporate taxes. Indirect taxes we assume. By the way, there was in the discussion, in the indirect taxes, everyone pays, right? It's not that indirect taxes are not being paid by the poor. In fact, they end up, because consumption, it's a consumption-based taxation, and therefore you pay much more of the tax poor pays. It's the personal income tax and the corporate taxes which are uneven. They are paid more by the high income earners and the richer part of the society, and those who earn less by a very definition pays less, because it's the income and the profit based taxation. There, this is by design, that in last 100 years, because industrial economy, if you would go back into it, industrial economy, by creating the scale of operations, created inequality of profits and the advantages. Then some businesses became too big and they earned too much of money, other businesses did not, and small businesses hardly, and those who are not in the business. So of the 140 crore people which we have in the country, there are about 8 crore businesses, all put together. Of that, the companies are only about, if you go by the data of the government, there are only about 9 lakh companies which file the tax returns. Of that, half file the loss-making returns. and half only file the profit-making returns. So it's less than 5 lakh companies which file any profit returns. So it's a very small base, but they earn the 90% of the corporate profits, right? So they earn more, so they need to pay. In the progressive taxation system, you need to collect the taxes from the richer and the high-income people. There was some discussion about the capital gains taxation. I know I'm talking to the audience who not like this, but just think about it. Today, if you take out the corporate tax part, the personal taxes, 90% of the personal tax comes from the wages taxation. It's the salary earners who pay the tax, right? Whereas the capital hardly pays any tax. Today, GDP is around 300 lakh crores, or let's put it in trillions, so $3 trillion or something, whereas wealth is about $15 trillion. But wealth doesn't pay any tax. Why should we have a system where those who work hard to earn wages end up paying taxes, but the capital, which earns on its own without actually doing anything, should pay less tax or no tax? So I understand there are lots of complications in the capital gain system and all around, and that should be sorted out. Different asset classes are getting taxed at different rates and things like that. But one big elephant in the room which is not getting taxed is the wealth. We have no wealth tax system in the country. So think about whether in times to come, when again the distribution of wealth is going to be much more uneven in times to come, should we not think of getting a wealth taxation system so that the capital or the asset or wealth is also taxed? So I'll come to the end of my initial discussion today. We can move towards the ESG economy, which is what is required, because you can no longer take shelter only around the profitability or for the equity holders, that you work for the equity holders. Corporations exist for only equity holders. There are many, many more stakeholders in the system. The days of sort of socializing your cost or pollutions are gone. In times to come, all these would have to be accounted for as part of your cost. The days of wages being put into the sidelines and the workers, and the way the economy now is digitalizing and becoming more and more of a different order, and the digital economy has very different challenges. That is where we will need to think about how do we create standards for the digital economy, the environmental economy. Those are the challenges which are there in times to come. I think you are equipped for that, but you would need to probably rise from what you do today to what you need to do in future for the needs of the future. And if that happens, I think you would play a very, very important, very, very salutary role, and I'll wish you all the best for that. Thank you very much.
So much, sir, for the thought-provoking session. Wonderful words. I request you to stay back on stage, and I would request CA Durgesh Kabra and CA Rohit Ruvatia to please come on stage and felicitate our guest of honor. Big round of applause for the guest of honor, please. Thank you so much, gentlemen. I would now like to invite on stage CA Ranjit Kumar Agarwal, Honorable Vice President ICAI, to address this August gathering, please.
Very respected our President of ICAI,
Sri Aniket Talati, who himself qualified for this award because he is below 40. But because of the conflict, he has not participated. Chairman of this committee, Durgesh Kabra, Vice Chairman Rohit Ruwatia. I can see all my council colleagues here. Subhash ji, very nice deliberation, and very young and dynamic leaders of our institute, our profession. We all are proud of you because this concept, first time in our institute we have developed how to bring the young dynamic leaders of our profession who can be the brand ambassador of entire fraternity of 4 lakh chartered accountants across the globe. And you are, I'm happy that you are one of them. And if you see the dynamics of the demographic dividends of India, average age of India is 29 years. China 37, Japan 48. And the 50% of the total population of India is below 25 years. And 65% of the total population of India below 35 years. And same ratio reflect in our ICI also. We have 4 lakh chartered accountants across the globe, and majority of them are below 40 years. And if you see the 5-year post-qualification and 5-year below qualification, the ratio of practicing and non-practicing chartered accountant in our institute is 5-year and above chartered accountant up to 4 lakh, 85% in practice, 15% in industry. And if you go the below 5 year, 25% in practice, 75% in industry. So 85% is coming down to 25% as far as practicing chartered accountant is concerned. So it's a huge scope and opportunity as far as industry is concerned. The way economy is growing, $3 trillion to $30 trillion we are envisaging. And entrepreneurship also, if you see, less than 5% of the total population of India are entrepreneurs. And there is a report which says that India has the potential of 81% of the total young population can be entrepreneur in this country. So you as a brand ambassador, why we are recognizing you? Because there cannot be a better motivation than recognition. You think that what the institute, once you qualify from the institute, whether you are coming to institute or not, we wanted to reach you out. We have decided the young population, those who are young members of ICI, the institute should reach out them. We should identify who are the brand ambassador, who can lead this profession, who can be a young population, young India, and showcase to the world that this is the Institute of Chartered Accountants of India in this country, which can be a brand ambassador and lead this country also through all of you. And as the finance and the economy and all these things are concerned, you all are aware, nothing moves in this country without the consent of the chartered accountant. Directly or indirectly, more than 70% of the total financial transactions of this country are certified by Indian chartered accountant. And across the globe also, we have 40,000 CA outside India working in the various MNC of those countries, and they are not doing data entry job. They are sitting in the boardroom of the MNC, framing the policy and growing the company of that country and growing themselves also. See, we all are proud of all our Indian chartered accountants, and you, since you have been recognized as one of the best brand ambassador, 40 young dynamic chartered accountant, and who can lead this profession, be a brand ambassador of ICI in the years to come. And I'm happy that under the leadership of our president, Sri Aniket Talati, who is also below the age of 40, you have a very bright future, and I wish all of you best of luck. Thank you very much.
Sir, we would like to have you back on stage because I'll request CA Durgesh Kabra to please felicitate you. Acha, okay. Great, great. So then, thank you so much for your words, sir. Moving on, I would like to invite CA Aniket S. Talati, Honorable President ICAI, to come on stage, please, and address the august audience.
Very good evening, ladies and gentlemen, the guest of honor, Subhash ji, the Honorable Vice President of the Institute, Sri Ranjit Kumar Agarwal ji, under whose leadership, and it was in fact his vision last year when he was chairman of the Committee for Members in Industry and Business, that this 40 under 40 was launched, and he conceptualized this concept. I'm not only saying this to say that it is not my baby, and because I'm under 40, I have constituted an award of this category, but in fact, it was his vision, his thought, and more importantly, his wish that we must recognize young achievers of our profession. And very uniquely, when he was the chairman, and happens very rarely, you would have seen in so many setups that on 12th of February of our institute, all the committees get dissolved and a new president and vice president gets elected. Yet, because the entire process could not be completed, and as chartered accountants and more importantly as office bearers of this august institute, it is not appropriate for us to compromise on the quality and rush things in terms of the jury or in terms of the process that has to be completed. Very graciously, and believe me, nobody can predict whether one is going to be the vice president on the 12th of February, yet he said that I will not want to complete this during my tenure and let the next committee take it up. So, to the Honorable Vice President, I think I salute your vision and the kind of attitude that you had to ensure that we have the right process of identifying the winners and the right process of making sure that we are able to reach to as many winners as possible. So let me first of all begin by congratulating all 40 of you who have been awarded today or are going to be awarded in this ceremony. We have the presence of so many of our council colleagues, and this entire program in this year, I must compliment and congratulate the chairman, Sri Durgesh Kumar Kabra ji, and the vice chairman, Rohit Urvatia ji, who have made sure that whatever was left in the previous term in terms of completion was done and has been done in such a grand and beautiful manner. So my compliments to CMIB and special thanks to the jury and CNBC. I had the pleasure of being and addressing in that jury meeting, and was very happy to see that stalwarts, not just of our profession, but industry leaders, and again having a process validation done through CARE ratings was ensured so that we could get 40 winners. And I am confident that going forward, this is going to be one event which happens year on year, and the Committee for Members in Industry and Business. Because as rightly mentioned by the Honorable Vice President, today more than 80% of the new members who qualify each attempt. And every May and every November when we have the examination and the results are declared in July and January, we are seeing increasingly attempt after attempt, year after year, that more and more of our newly qualified members are preferring to go into industry. It may be going into practice, it may be going into service in a company, or it may be setting up their own entrepreneurial practice. So many startups, so many people in the fintech age, and in so many other companies are now eager not just to follow the old treaded path of going into practice, but they are willing to open up their own entrepreneurial startups and investments. So to recognize them, and very rightly so, this concept has been started, and I would hope that going forward in the years to come, this gets institutionalized and we are able to recognize our leaders, our young brand ambassadors, all of you who are in this room, and of course all those who could not get shortlisted and selected in this list of 40 under 40, but I'm sure all those who applied or who were nominated are equally worthy and will definitely in the future get recognition from the institute. You'll be happy to note that yes, when we have launched it for the first time, there was inhibition amongst the entire council whether we will be able to identify 40 leaders, and below 40 will we be able to get a number. but extremely pleased to see that as in everything of our profession, it may be chartered accountants doing direct tax, it may be in GST or in any practice area, even on business leaders, we have no dearth of leaders who are doing so phenomenally well in the industry, in business, and in making sure that they are leaving a big impact on the economy. So the 40 under 40 theme, as has been mentioned, is very important because today if you look at the global environment, and very recently one had the opportunity to visit IFAC, which is the International Federation of Accountants. And the biggest theme which is being discussed, not just at IFAC, but by all professional accounting bodies across the globe. And I think Institute in India is singularly blessed with this aspect, is that the top agenda in all the countries and in all accounting bodies is how do you retain and attract the best talent to pursue accountancy. You will be surprised to see that it may be US, it may be UK, it may be Australia, or it may be even a lot of developing countries which are at par with India, and not just in the developed league. There is a huge shortage of good people choosing to do accounting, choosing to get into the field of accounting. And therefore, a huge discussion is happening across the globe of how do you retain, how do you attract, and how do you ensure that the best young minds who are pursuing commerce or are inclined towards commerce even during their schooling days can be attracted towards public accounting and towards chartered accountancy. And here in India, like I mentioned, we are singularly lucky because if you look at the statistics over the past 5 years, when I entered the council in 2018, the foundation registrations were close to 90,000, and I'm rounding figures here up for the sake of convenience. They have been gradually growing from 90 to 98,000, 105,000, 115,000. And last year we had 1,25,000 students who enrolled for the foundation course. Therefore, this course is still very attractive, and we are able to ensure that the best minds in commerce still continue to have chartered accountancy as their preferred profession. But what we are also trying to do at the Institute, which is very important for me to share with all of you, is not just to look at this course from an India perspective. Today, when we are in the global economy, the Vice President and myself have just come from Oman, where there are over 700 chartered accountants, and the Oman Chamber of Commerce and Industry and Invest Oman, which we had a meeting with yesterday, themselves acknowledged that you pick any company in Oman, and 7 out of 10 chartered accountants there, 7 out of 10 companies there will be run by chartered accountants, either as CFOs or as CEOs. That is the kind of presence that our profession has. And if you go to the Middle East, the number in UAE is more than 10,000 chartered accountants. And there too, if you were to do a straw poll, I'm very confident that 7 out of 10 companies there also will have chartered accountants contributing. So therefore, the profession, the 4 lakh chartered accountants that are there, are not just spread in India through the 167 branches, 5 regional councils, but more importantly today, when the Institute has 44 overseas chapters, 34 representative offices in 78 countries and 78 cities and 50 countries of the world, the profession and the Institute has truly gone global. And therefore now to ensure that we are able to offer our curriculum not just to the best brains in India pursuing commerce, but we also want to ensure that any person in any part of the world who is inclined towards commerce and wants to make a career, chartered accountancy should be the course of choice, and it should be from the Institute of Chartered Accountants of India. The new curriculum which is being proposed and is under the approval of the government, and we are confident in very short duration the same will be approved. We are proposing an international curriculum so that students across the world can also pursue this course. And therefore, going forward, it is not going to be restricted to 40 under 40 from India, but I would love to see the day when you are competing not just with your colleagues and your professionals and your achievers within India, but with chartered accountants from across the world. In terms of the achievements and what Subhashji was mentioning in his address, very important aspects that he touched upon, and I'm very pleased to inform all of you that the Institute no longer only focuses on the traditional areas of accounting, auditing, direct taxes, indirect taxes, and commercial laws or corporate laws. Today we have truly transcended and gone beyond. The Institute of Chartered Accountants of India is the prime partner in the B20 under the G20 of India. We are actively participating in the Action Council, which is working on sustainability. And sir, when you mentioned about societal goals and how to balance accounting and finance with what the society is doing, the ESG reporting, the assurance which is going to come on sustainability, India has truly taken a leadership role. In 2019, even before the International Sustainability Standards Board or the ISSB was established, ICAI and India established what is the Sustainability Reporting Standards Board or the SRSB. We have assurance standards so that today if an entity wants to report on sustainability, on ESG, we have enabling mechanisms for our members to certify and attest and to showcase how we are ensuring compliance with ESG and that greenwashing is not happening, but truly sustainability in its core is being taken care by corporations and companies. On the societal front also, sir, you'll be very happy to note that the SEBI had notified and the Union Finance Minister in her budget speech had mentioned about social stock exchanges. The social stock exchange is nothing but a platform for NPOs, for NGOs, for Section 8 companies to raise corpus and to raise capital. This is going to be done through what are known as zero coupon, zero principal bonds, which have been notified under the securities law and are known as securities and instruments which the government has already notified. Both the Bombay Stock Exchange and NSE have notified their social stock exchanges. And what will happen in these social stock exchanges are that the corporations, Section 8 companies, trusts, NGOs, which hitherto were only taking contributions in the form of donations and were able to source capital for themselves only through their known sources, can now list on the social stock exchange. They will report on the social objectives for which that trust, Section 8 company or NGO has been formed. And more importantly, what SEBI required was, can this be audited? Can an assurance service be provided? And immediately at the Institute, we raised our hand and said, yes, we will ensure that we will come up with world-class social audit standards. And today those social audit standards have been notified. Any chartered accountant can do the certificate course with NISIM, appear in the examination and qualify as a social auditor. And going forward, it is not just going to be entrepreneurship, it is not just going to be capital for for-profit companies, but even not-for-profit corporations, Section 8 companies and trusts. The Institute is trying that how we can play our role so that when they are trying to raise capital through these various instruments on social stock exchanges, the social auditors and the social audit of these enterprises is done by our chartered accountants. So a lot of capacity building measures, sir, are being taken to ensure that we are not only focus on the financial aspect, but are also able to focus on the societal goals and objectives, which are very important. So with this, friends, let me just once again thank the CMIB for organizing this wonderful event, thank the jury members who put in so much time and dedicated their efforts to make sure that we are able to identify the best 40 leaders under 40 who are going to be brand ambassadors of the profession. It is you who we are going to make our poster boys and make sure that the younger generation, when we go for our campus, when we go to the students of commerce, when we go and showcase to the government that the Institute is partnering in nation building, it is the achievement of all of you, because the Institute is definitely not just the Central Council of 32 elected members and 8 government nominated members. It is not made up of only our regional councils and branches, but I truly believe that the Institute resides in each one of you, and you are the brand ambassadors of the Institute. So my request and urge to all of you will be that you may have had positive or negative experiences of the Institute. We all might not have qualified also in the first attempt, and therefore may hold a grudge against the Institute for various other reasons and not just the examination. Your answers may not have been provided, but I think today is an opportunity for us to celebrate our great alma mater, this one degree, this one recognition, this one qualification, which gave us the foot in the door and is proudly held by each one of us, come 1st of July, the Institute of Chartered Accountants of India will have its 75th Foundation Day. We were established on 1st of July 1949, and 1st of July 2023 is going to be our 75th Foundation Day. We look forward to celebrating the 75 glorious years of the Institute, the contribution made by 4 lakh Chartered Accountant members in various fields of society. Because today, if the government or if anybody is very proud to say that the direct tax collections have increased from 11 lakh crores to 33 lakh crores, or the indirect tax collections are showing such a huge number, the direct tax and direct tax collection, I think a very important role is being played by all of you who are sitting in the finance department, sitting late at night, finalizing the tax challans, making those tax payments, creating awareness in the companies why it is important for us to contribute and be a partner in nation building. And of course, our friends who are in practice, who are also helping in ensuring compliance, filing returns, and making sure that when India is aiming to be a developed economy, and the goal is to be a $5 trillion economy, we all have a very, very important role to play. With these words, I compliment each one of you and only request that you ensure that the flag of the profession and the flag of this great nation, India, keeps flying very, very high. Thank you very much.
Thank you so much, Mr. Aniket. Yes, please stay back on stage, and I would also request CA Ranjit Kumar Agarwal to join us back on stage. Requesting CA Durgesh Kabra and CA Rohit Ravatia to please do the felicitations. Thank you, sirs. And now let's move on to the much-awaited awards ceremony that we all have been waiting for. I can see a lot of giggles and smiles on everybody's faces here. Selecting the winners from a list of accomplished CA business leaders is no mean feat. Under stringent, objective, and transparent criteria, business leaders were judged by a jury comprising of leadership from ICAI, industry leaders, and management stalwarts such as Mr. Akhil Gupta, VC Bharti Enterprises, Mr. Motilal Oswal, MD and CEO of Motilal Oswal Financial Services, Mr. Ramesh D. Chandok, former MD and CEO, KEC International, Mr. Ritesh Tiwari, Executive Director and CFO at HUL South Asia, Mr. Rajesh Magao, co-founder and Group CEO, Make My Trip, and Mr. KV Chaudhary, former Central Vigilance Commissioner, along with our process partner, Care Edge Ratings. We gather here to raise a toast to the business leaders whose innovative ideas and strategies resulted in overall business growth and their outstanding leadership role in cause-driven campaigns by the government for the greater good of the environment, people, and economy. Well, as we begin the awards ceremony, ladies and gentlemen, may I have the honor of inviting back on stage Mr. Subhash Chandra Garg, CA Aniket S. Talati, CA Ranjit Kumar Agarwal, CA Durgesh Kabra, and CA Rohit Ravatia. Also, I would like to invite the Central Council member, Mr. Sushil Goyal. If you could, sir, join us on stage for the first set of awards. Thank you so much. Ladies and gentlemen, announcing the 40 CA business leaders under the age of 40. Let's call on the winners. Well, the first on the list, may I please invite on stage CA Prathana Bagrodia. Big round of applause for Prathana Bagrodia. Congratulations, CA Prathna. Well, next award, please welcome on stage CA Iti Agarwal. Big round of applause for CA Iti Agarwal. Congratulations, CA Iti Agarwal. Please welcome on stage CA Vikram Pandya. Please keep the applause going. Congratulations, CA Vikram. Mr. Sushil Goyal, thank you so much for joining us here on stage. May I request the Central Council member, Mr. Raj Chawla, to join us for the next set of awards, please. Well, moving on, please welcome on stage CA Abhinav Jain. Please all smile. Please welcome CA Abhinav Jain. Congratulations, CA Abhinav Jain. Moving on, please welcome CA Kshitij Puri on stage. Congratulations, Kshitij Puri. Please welcome on stage CA Rahul Sharma. Big round of applause for CA Rahul Sharma. Congratulations, CA Rahul Sharma. Well, thank you so much, Mr. Raj Chawla. May I please request on stage Mr. Umesh Sharma for the next set of awards. Now please welcome on stage CA Hemant Sindhwani. big round of applause for CA Hemant Sindwani. Moving on, please welcome on stage CA Bhagyashree Thakkar. Congratulations, CA Bhagyashree Thakkar. Please welcome on stage CA Vibhav Goyal. Big round of applause, CA Vibhav Goyal. Congratulations, CA Vibhav. Moving on, so I would request, thank you so much, Mr. Umesh Sharma. Now I would request Mr. Raj Kumar Adukia to please join us for the next set of awards. Please welcome CA Jinand Shah. CA Jinand Shah. Congratulations, CA Jinand Shah. Moving on, please welcome on stage CA Kamal Puri. Please keep the applause going. Congratulations, CA Kamal Puri. Now please welcome on stage CA Sanjay Navandhar. Congratulations, CA Sanjay, and thank you so much, Mr. Raj. Well, for the next set of awards, may I please invite on stage Mr. Charanjot Singh Nanda. Now please welcome on stage CA Yogesh Mulgaonkar. CA Yogesh Mulgaonkar, can we have you on stage, please? Congratulations, CA Yogesh. Moving on, please welcome on stage CA Ruchika Katiyal. Congratulations, CA Ruchika Katiyal. Please welcome on stage CA Prateek Bajaj. Congratulations, CA Prateek Bajaj, and thank you so much, Mr. Charanjot Singh ji, for joining us here on stage. For the next set of awards, may I please invite... Thank you so much, sir. For the next set of awards, may I please invite on stage Mr. Piyush Chhajar. Well, the next winner is CA Sriram Srinivasan. Please, can we have a big round of applause for him? Congratulations, CA Sriram Srinivasan. Now please welcome on stage CA Rahul Saria. Please keep the applause going. There's a lot of motivation needed here for all our winners. Congratulations, CA Rahul Saria. Now please welcome on stage CA Himani Dhamija. Big round of applause for CA Himani Dhamija. Congratulations, CA Himani, and thank you so much, Mr. Piyush, for joining us on stage. For the next set of awards, may I please invite on stage Mr. Anuj Goyal. the Central Council member, Mr. Anuj Goyal. Well, please welcome the next winner on stage, CA Om Thakur. Congratulations, CA Om Thakur. For the next winner, please welcome on stage CA Rajesh Garg. Please keep the clapping and applause going. Congratulations and thank you so much, Mr. Anuj Goyal, for joining us on stage. For the next set of awards, may I please request to join us on stage Mr. Sanjay Agarwal, the Central Council member. Thank you so much, sir. Well, the next winner, please welcome with a big round of applause, CA Deepak Singla. Please welcome CA Pallav Sharma. The applause going. There's a lot of motivation needed here. Congratulations, CA Pallav Sharma, and thank you so much, Mr. Sanjay Agarwal, for joining us on stage. Well, for the next set of awards, may I invite on stage Mr. Hansraj Chuk. Thank you so much for joining us here, sir. And the next winner, please welcome on stage CA Anshul Gupta. CA Anshul Gupta. I'm requesting all the winners and everybody to please stay back for a group photo session after the award ceremony. Please do not leave. Congratulations. Now please welcome on stage CA Maulik Jusani. Big round of applause for CA Maulik Jusani. Congratulations and thank you so much, Mr. Hansraj, for joining us on stage. To present the next set of awards, may I please request to join us on stage Mr. Gyan Chandra Misra, the Central Council member, Mr. Gyan Chandra Misra. Can we have a big round of applause for him as well? And I would like to invite the next winner. Please welcome CA Prateek Tosniwal. CA Prateek Tosniwal on stage, please. Can we have the applause for him? A lot of motivation, please. Congratulations. Now may I please welcome on stage CA Priyesh Mehta. The next winner is CA Priyesh Mehta. Congratulations, CA Priyesh Mehta, and thank you so much, sir, for joining us on stage. For the next set of awards, may I please invite on stage Mr. Pramod Jain, the Central Council member, Mr. Pramod Jain, for the next set of awards, please. And I would like to invite the winner, CA Puneet Khandelwal, on stage. Congratulations to the winner. Please welcome our next winner, CA Shammi Prabhakar. Big round of applause for CA Shammi Prabhakar. Congratulations. Now please welcome on stage CA Rishabh Jain. that is so cute. Big round of applause. This deserves a special applause for the beautiful girls on stage. Congratulations, CA Rishabh, and thank you so much, Mr. Pramod, for joining us on stage. Well, for the next set of awards, may I please invite on stage Mr. D. Prasanna, the Central Council member. Moving on, please welcome on stage the next winner, CA Rahul Sharma. CA Rahul Sharma, big round of applause. Congratulations, CA Rahul. Now please welcome the next winner, CA Jugnesh Mundra. CA Jugnesh Mundra, congratulations. I request all of you to stay back after this for the group photo op session. Congratulations. Please welcome our next winner on stage, CA Vikash Khadolia. Please keep the applause going. CA Vikash Khadolia, can we have you on stage, please? Congratulations. Moving on, please welcome on stage CA Swapnesh Bansal. Big round of applause for CA Swapnesh Bansal, please. Congratulations and thank you so much, Mr. Prasanna, for joining us. Well, to present the last set of awards, may I invite on stage Mr. Rajendra Kumar, the Central Council member. Sir, please. We have got a few more winners left now. Please welcome on stage CA Jitendra Nagpal. I know everybody is tired, but please keep the applause going. Now please welcome on stage CA Giriraj Ajmera. CA Giriraj Ajmera. Congratulations, CA Giriraj. Moving on, please welcome on stage CA Himanshu Bakshi. Big round of applause for CA Himanshu Bakshi. Please keep the applause going. Can we have a big round of applause? Congratulations, CA Himanshu Bakshi. Moving on, please welcome on stage CA Anup Agrawal. Big round of applause for CA Anup Agrawal. Congratulations, CA Anup Agrawal. Moving on, please welcome on stage CA Priyank Fafalia. Congratulations, CA Priyank. And our last winner for tonight is CA Nidhi Jain, requesting CA Yogesh to receive the award on her behalf, as CA Nidhi Jain could not join us. Congratulations, CA Nidhi, and thank you so much, Mr. Yogesh. Heartiest congratulations to all the winners. May I now request all the winners as well as all the guests to please come back on stage for a group photo op session. Winners and council members to please come on stage. We'll have a nice photo op session with all of you. I request all of you to please stay back. Please settle down. The event is still not ended. Congratulations to all the winners and thank you so much, all our guests. And on that note, ladies and gentlemen, we have come to the end of the ICAI Presents CA Business Leaders Awards 40 Under 40 in association with CNBC TV 18. But before we sign out, can I request everyone to please settle down? Okay, so before signing off, let me take this opportunity to invite on stage CA Rohit Ravatia, Vice Chairman, CMIB ICAI, for his closing remarks.
Thank you, MOC. Honorable President of the Institute, Aniket Taleti ji, Vice President of the Institute, Ranjit Agarwal ji, the Chairman of the Committee, Durgesh Kabra ji. I can see the Council members, Pramod Jain sir, Anuj Goyal ji, Rajinder Kumar ji, Piyush Shajar ji, Gyan Mishra ji, Prasanna ji, Rajkumar Adukia ji, Umesh ji, Hansraj ji were also there, Sanjay ji was also there. Maybe if I'm not able to view or I'm not visible. All the awardees and their close family members, the team of the Institute, the team of the CNBC, working since last 8-9 months on this particular project, which finally comes to an end
Rather, I should say it is not the end, it is the beginning of new thoughts, the new energies, because we people are the privileged, proud awardees. First time I was given an opportunity 10 years back to propose a vote of thanks. And that time I need to Google and search what is the meaning of vote of thanks. But today, coming to the council, representing most of the young generation of the chartered accountants in the country, and probably the youngest council member who has been youngest at all the three forums, at the branch level, at the regional level, at the council level, with your blessings. And unfortunately, along with my president, I was also ineligible to participate in this 40 under 40 because my president is 3 years elder than me. And I tried to fill the form, but eventually president said, I'll not allow you to participate, but I will allow you to distribute. So again, it is a privilege for me. I'm thankful, President sir, Vice President sir, for giving this opportunity. And of course, it is a great day. I have been given this opportunity to conclude. I'm thankful to all the organizers who have done their great efforts. Of course, I'm thankful to the team of the institute who has worked day and night. My sincere gratitude to our chief guest, Subhash Chandra ji, the panelists, all the panelists who have spared their valuable time to stay back so long. You 40 people, the 40 chartered accountants, are the brand ambassador of the institute. You are staying back, and I can see the small child clapping when his father was there, and I can feel the passion that yes, he is learning a lot from him. I remember the day of my school when we feel to see that somebody, one of my friend is receiving an award and I'm not able to receive, and I'm sure जिन लोगों को स्कूल में कभी अवार्ड नहीं मिलता, जब जीवन में जब वो सफलता का शिखर प्राप्त करते हैं उनको अवार्ड मिलता है. And it is the way we have tried to recognize every prominent chartered accountant who has given a lot to this society. So you people are selected by the jury. The jury was wonderful, and I would like to thank the jury in absentia who has given their valuable time and efforts in selecting you people. This is the first year when we are doing this 40 under 40. We probably hope that we will continue the same spirit and more awards to come, and a lot of activities in Committee for Members in Industry we are planning. You people are always welcome to give and to support all the valuable suggestions which we can implement in our committee, and I assure and I promise along with my chairman Durgesh Kabra ji will put every stone, every efforts to take your suggestions and to work accordingly. Coming to the panel discussion which we had related to the economy, tax reforms, I'm confident that after 75 years of our independence, we are in our Amrit Mahotsav year, and we have crossed 3 trillion economy. The size of the economy become the 3rd largest economy in the world. 10 years down the line, I believe that with the help of you chartered accountants, the leader of the profession, the members of our institute will be able to reach 10 trillion. And we'll be celebrating 100 years of our independence. I'm confident we'll cross 50 trillion economy with the support of you all people working day and night for the economy, that we have crossed all the limit in collection of the revenues, maybe GST, maybe income tax. You people are the actual strength, actual backbone, and you people prove us that yes, we at the institute along with you are the partner in nation building. So with this, I conclude, and one more suggestion: you people are active on social media. Kindly post all your photographs. Please tag institute. Please write some comments about this event, about CNBC, that yes, we are doing something, we are putting our efforts, and first time this event, such kind of events has been organized. You can also publish in your local newspapers also that you have received such kind of awards. It will be again a brand building for the institute. We have tried to cover this coverage in the Economic Times in the major metro cities, which has been published today in the newspaper, so that you people also get some value, because sometimes at the young age, it is very difficult to get recognized. And when we get older, we are recognized. So that time it is late. But today when we are recognized, we feel that yes, it is the right time. We are working for the society, we are working for the profession, we are working for the country. And institute feel privileged to recognize you all. Of course, we all chartered accountants have equal capabilities, capacities. One sincere request, boss, जब भी जीवन में कोई चार्टर्ड अकाउंटेंट भाई या बहन आपके पास आए किसी जॉब की उम्मीद में, किसी अपेक्षा में आपसे उम्मीद करें, क्योंकि आप सब लोग ब्रांड एम्बेसडर, हम आप लोगों का खूब प्रचार करेंगे, बताएंगे कि साहब इन लोगों ने बहुत अच्छा अचीवमेंट करा है, तो ऐसा नहीं है कि खाली अवार्ड मिला है, आपको वापस समाज को वापस देना है, अपने प्रोफेशन को भी वापस देना है. Whenever any CA brother or sister come to you with any kind of expectation that he should get any opportunity in your organization, at anywhere, wherever you can recommend any resume or any biodata you receive, my sincere request, kindly try your best effort कि वो place हो और उसमें भी उतनी कैपेसिटी जितनी आप में है, उसको भी वो अवार्ड मिलना चाहिए, बट आप लोग कहीं ना कहीं जरिया बने, जिस तरीके से आज इंस्टीट्यूट आपका जरिया बना है। इसी बात के साथ मैं अपनी बात को विराम देता हूं। थैंक यू वेरी मच। जय हिंद, जय भारत, जय आईसीआई।
Thank you so much, CA Rohit, for those lovely words. With that, ladies and gentlemen, it's a wrap to the ICAI presents CA Business Leader Awards 40 under 40 in association with CNBC TV 18, process partner Care Edge Ratings, bespoke partner Da Milano. I would like to thank all the esteemed speakers, thought leaders, and the winners for their participation in the event today. And also big thanks to all of you for being such a wonderful audience. Thank you once again. Please enjoy the rest of the evening ahead.